In this video, traders, we're going to look at 4 ways to trade a trend line or a channel break. Stay tuned. Hey guys, warm welcome to you. This is a bit of a follow-up video from an initial video I did where I talked about 5 ways to trade within a trend line or a channel, ways that you can actually trade while the price is trading within the channel. That was an uptrend channel. Thought I'd give the downside a bit of love in this video. Go and check that one out if you're actually in a channel and you want to find out kind of ways and little maybe ideas to trade within the actual channel. Now, this is 4 ways to trade when we break, or to get on that break, because actually that's potentially the more powerful move. There was one probably several months ago, it might be a year or 2 ago now actually, USD JPY. Have a look at the daily chart. There was a lovely break of a downtrend channel, bang, and it just went and it went and it went. And there's loads of examples like that as well, but that's just one that springs to my mind. It's quite a popular one, and a lot of people got on the end of that because it was quite a clean break. Anyway, so that would be number 1. Perfect example, straight into it, perfect segue. Use normal breakout rules. So what are normal breakout rules? So normal breakout rules are pretty much, listen, you've got a couple of ways of doing it, haven't you? You either trade it as soon as it breaks out, so intraday. So let's say this is a daily chart, breaks out, you're trading it on the break, or you wait for a close, and if you get one close print, you trade it, or you maybe buy the open the next day, or you've actually got a third one, haven't you? Let's draw it. The third one is, so let's say that's the close, so you can either buy on that one, you can either buy the next day at the open and hope that it carries on, or another one is you have the, let's say that's the daily candle there, you buy on a break of the high the next day. Assume the close isn't the high, but let's say it's above the trend line. Let's say trend line's coming to here, and you buy when it breaks the high the next day. So there's a couple of ways of kind of getting involved in that. Right, so that's normal breakout rules. And you want to see big volume with that. There's a few little parameters that you like to see with breakouts. And also, guys, it does depend on the position of this trend line. It depends on what's happened before with price, where it's all been. Don't need to go down that rabbit hole too much with this, but you know, put it in perspective. If there's a broader range, it's not really that important. If it's something that's kind of pushing right down, has been down near 52-week lows and is breaking to the downside, even better. Which actually brings me to a good point. A break to the upside and a downside, are they the same? Well, depends on the time frame, depends on how steep things are as well. You know, what's the angle of the trend line? How long has the trend line been going for? The trend line's been going for a long way, then potentially a break to the upside is not bad. A kind of test to low, and then a break to the upside is just as powerful, because it's kind of the end of a trend and a start potentially of a new one. Or, you know, a break to the downside could be good, but it also could be the last kind of flush and exhaustion move before we get a change of a trend. So you've got to put it in context, and you know, there's no hard and fast rule for it. Just have a look at where it is and where it occurs, time frame you want, etc. So normal breakout rules. And I think I added that, you know, you want to see some good volume with the breakout as well. Right, number 2, wait for a pullback. So you're breaking the trend, you wait then for a pullback, preferably to the trend line, and there's your buy. So rather than actually buying it on the break in that little scenario there, you'd wait for it to push through and eventually come back. And if that's your trend line there, you're buying it on the trend line. So these were let's say these were your daily candles. Comes back there, you buy it, and then you go for a push up to the upside. Stops, by the way, guys, okay, challenging always on breakouts. You don't want it too tight, because often it comes back, has a little fake underneath, intraday, pops back up. If you're trading off a daily chart, you know, you've got to use your own judgment again, and every case is different. Couple of ways of doing it: ATR, you know, average true range, have a little bit of a wider stop. Use a mean, so a moving average that's running probably in the middle of that. Use a midpoint if you want to give it that much room, but use your judgment based on your risk tolerance and based on the pattern and all the kind of gut stuff that you're grading the play with. So wait for a pullback. Number 3 is preempt the break. I quite like this one because this gives you a lot of cushion on the deal. So let's say, I'll just make a smudge of that, but you see what I'm going to say in a second. Let's just say that you think, all right, well, I want to be prepared for the break. Now, you know, rushing in thinking everything is going to break, and kind of buying every time you buy here, you're just going to lose money, because every time, you know, you think about how many times it's done this, what's the likelihood of the next time doing it? The next time, you know, you could sit through 5 or 6 of these, get stopped, and new negative expectancy. So preempt the break. If maybe you've had a fake out to the downside first that's failed, then you might say, well, okay, I'll take that and I will hold for a breakout. And if it doesn't break out, I'm prepared to give back profits back to this mean. So say you were long here, you push back up, it didn't break, you were hoping for the break, came back, there was your stop, you're out. If it did break, you've not only got this cushion, but now you've got the whole breakout volatility expansion move. You can get your teeth really stuck into it, can become a really nice trade. So preempt the break, either buying at the lows or buying somewhere rather than up here. You know, if you're too high, then it becomes a bit tricky, unless you're on a daily chart, you've had a little bit of a range there, tight range, all of a sudden, bang, you get a good solid daily range, maybe you get some news flow, maybe you get some volume coming in, you get a good bar that kind of closes up near the high. You're like, well, listen, I'm expecting follow through on day 2 on this, which will break the trend line, so I'm going to preempt the trend line break with another pattern that I would trade normally. So that's something else you can do, preempting the break. Right, number 4, guys, is wait for a flag post break. Those of you who really don't like these breakouts, really don't want to get involved in it, then just wait for the flag. So normal thing, guys, I'll do it on here now. As it pushes out, rather than waiting for a pullback, wait for it to pause a little bit and trade it using flag rules and then use a break like that. That's quite a common pattern actually, because it's kind of the psychology of that is it's broken out, pauses, buyers are waiting, any sellers coming in, they don't want to pay up yet, want to see if any sellers there, no sellers really come in, waiting, then the buyer's like, okay, we're still going to go, we think this is going to run for the next however many quarters, and off it goes, depending on what time frame you're on. So there's a few ways, guys, there's 4 ways actually of trading the channel break. Normal breakout rules, waiting for that pullback, preempting the break by kind of getting on something beforehand and being early to it and having a nice cushion, and that's probably one of my favorite ones out of the 4. And then the 4th one, waiting for a flag post break. That's actually normally better when you don't really fancy this trend. You're like, you know what, maybe it's a market you don't trade very much, you're not watching that often, and then you see it, it's broken, it's alerted you, maybe you've had some alert set on the trend line, or most likely kind of above the trend line is your actual alert. And you get your alert set, you go back and look at the market, you go, oh, and it's broken out, okay, well, I wouldn't mind getting in. Now, how can I get in? Okay, first pullback, or it's flat, okay, it's flagging, all right, I'll trade it with the flag kind of rules and see where it goes from that. So that's, you know, something that maybe is in a market you're not that familiar with. Preempt the break's my favorite. Let me know what your favorite is, guys, in the comment section below. 1, 2, 3 or 4, or have you got a 5th you'd like to add? I'm always interested to hear your opinion on the videos. All right, guys, take care. If you like this kind of stuff, thumbs up appreciated, as is your support and subscription. If you haven't, take care. Bye-bye.